Joining me now to break down the numbers is Rob Thummel, Portfolio Manager of Tortoise Capital. All right, Rob, thank you so much for joining us this Friday. Happy Friday to you. I'll give the people a few headlines. Exxon reporting EPS of $1.64. That was better than expected. Revenue, $81.5 billion. That's also better than expected in terms of Chevron. EPS, $1.77 on an adjusted basis. That was better than expectations. Revenue, $44.82 billion. Now, it did take a hit because of lower oil prices. And then, of course, there's all the issues around its acquisition of Hess. Let's dive into Exxon. When you take a look at first blush, what's your reaction to its results, Rob?
Well, they're pretty good. They exceeded analyst expectations, which is good. The things I look for, Diane, though, is beyond a little bit deeper than that. They continue to generate a lot of free cash flow at Exxon, and they continue to be disciplined. They're on pace to buy back 5% of their stock this year, 5% of the market cap this year. So that's around $20 billion. They're right on pace for that. They're probably going to be right in the middle, actually maybe a little on the low end, maybe a little lower than their capital expenditures. Well, I'm interested to hear what they have to say about capital spending, because that's been a little light, at least for the first half of the year compared to where they forecasted for the entire year. So continue to produce at record volumes. Permian basin production continued to be high as well. So everything's going pretty well there, although we do think that the oil price is coming down in the second half. So that will impact both the earnings of Exxon and Chevron.
I mean, because I've heard from analyst after analyst that we expect to see oil prices be in this range for WTI around like $60 to $65 a barrel. I mean, today we're sitting at, it's a little lower, but we're just around $69 a barrel. But again, I've not heard any voices say anything beyond $70 a barrel. As it relates to Chevron, what's your reaction to its latest results?
Well, very similar. Chevron did beat, obviously, as well, beat analyst expectations. So I think the stock, at least in the pre-market's reacting relatively well. Similar fashion, Chevron and Exxon have both taken the same capital discipline. So Chevron's got a lot of excess free cash flow. They are also buying back shares, a little over 5% of the market cap, and they're on pace to do that as well. Obviously, the discussion about Chevron is now going to be the integration of Hess now that transaction has been approved. And so we'll see how that goes and see what they're going to do with production. But once again, record production volumes for Chevron too. Record production volumes out of the Permian Basin. They're producing over 1 million barrels a day. But we share the same concern with Exxon and Chevron with the lower oil price. So we like actually in our Tortoise Energy Fund more of pure play natural gas. So companies like EQT that are more pure play natural gas. We see natural gas really as the opportunity for the second half of the year.
Ask you, I'm glad you brought up that deal because, look, we know that's been finalized. Obviously, it did not go the way that Exxon wanted it to go. They disagreed with what the arbitration court decided with regard to those assets. They wanted, they claimed that they had the first right of refusal, essentially. Why are those assets so important?
Yeah, well, Guyana is really a new discovery, and it's been phenomenal. And you got to give Exxon credit for discovering this field. And so it has. So outside of the U.S., you don't really hear about a lot of oil production growth in the world at all. Really large scale exploration of oil and gas production is at minimal from an investment perspective. But Guyana is one of the bright spots. And so we're going to see substantial growth in terms of hundreds of thousands of barrels of oil coming out of Guyana and growth out of Guyana over the next several years. And so obviously Hess owned a minority ownership position in that field that Chevron wanted to acquire, and they were successful and being able to acquire that. Obviously, Exxon felt they had the opportunity to buy that asset first, and arbiters ruled in favor of Chevron, as you highlight.
So is this about essentially the future, a future growth opportunity? Because one of the things I've seen is that this Stabroek field is, home to more than 11 billion barrels of oil. So is it potentially, this is the growth trajectory here?
It is for oil, Diane, but if you think just you zoom back out and look bigger picture, the way we look at it at Tortoise, we think electricity is the new oil. We think oil is going to be relevant, but electricity is the new oil because of all of this AI development. And so what does that mean for the energy sector? Well, it means a plethora of opportunities, but specifically natural gas will be the fuel source to generate a lot of that electricity for AI going forward. So oil's still relevant, it'll still be important, but we see electricity becoming the new oil.
So oil still important. Any final thoughts you want to leave us with as it relates to the latest results from Exxon Mobil or Chevron or just across the energy space in general, Rob?
Well, no, all I say is there's a lot of exciting things going on. Just remember there's a lot of talk about AI, but AI doesn't run on code alone. It runs on infrastructure, and you need a lot of energy for all of these AI applications. And so energy is going to be a sector that when you listen to a lot of these tech companies talk today, they're talking about gigabytes, but they're also talking about gigawatts. So they're talking about energy and natural gas, nuclear. They're going to be really important going forward over the next several decades, because of the need for energy infrastructure, electricity infrastructure to drive all of these new AI applications. So I think that's something that investors really want to look at. If you haven't looked at the energy sector before, it's evolving and there's some opportunities here.
All right. Thank you, Rob. My takeaway from you, electricity is the new oil. That's Rob Thummel, Portfolio Manager, Tortoise Capital. Rob, have a great weekend.